Happy Friday. And yes, you're unfortunately reading the headline correct. Mortgage rates rose, albeit marginally, but we are starting the day off with the 30-year fix up over last week. 6.82 as of this morning, to be exact, up from last week's 6.79. And if you're like me, you're probably scratching your head because in that same breath, we received consumer and wholesale inflation, which showed a surprising decline. And typically, as we know, as we've seen in multiple iterations behind us, CPI week, where it was favorable, meant more favorable rates. And the exact opposite occurred this time. So this week, I want to cover on that. Also, tariffs. As we know, tariffs have been the talk of the town, what impact we're seeing on the market front. And I want to close it down with buyer momentum. We're seeing a tremendous amount of buyers come out of that woodwork, and I hope you are as well. Yet one of the biggest concern buyers are bringing to the table, as we've seen through this cycle, is, hey, I have this home I need to sell, but I don't want to make a contingent offer and I don't want to sell it before I have something to buy. So what can we do to help those clients move forward? So first and foremost, let's jump into CPI, PPI, Consumer Price Index, Producers Price Index. As I mentioned at the open, yes, we received both of those reports earlier this week. And by surprise, we saw inflation on the headline core and core both decline on a year over year basis as well as a month over month basis. And again, as I said earlier, if you're like me, you're probably scratching your head. We saw inflation drop below 3% on the headline number. Why didn't bonds rally, which in turn drove interest rates lower? And the same on the wholesale side through the producer price index report received yesterday. We saw a very sharp fall off. I mean, a huge miss. And we saw the exact opposite reaction. Interest rates actually went higher, as we're seeing here this morning. And the question really becomes, and I know, clients are asking us, Eric, hey, we saw another meaningful round of inflationary wins, yet mortgage rates are higher. Well, obviously the elephant in the room, tariffs. Tariffs have been the talk of the town and in turn have sparked massive volatility within the financial markets, specifically the stock market. And where, yes, inflation is incredibly important, there's some underlying tones within the inflation report, which is creating concern that we didn't see moderation on the meaningful services that carry over to personal consumption expenditures. But not to go super deep into the weeds, let's go back to tariffs and its impact right now on inflation. Tariffs are creating a tremendous amount of volatility. It's one day, hey, it's 25%, next day that's gone. And the day after that, hey, it's 200% in tariffs. So right now, the market really doesn't understand, or know, I should say, what the next move is. As we know, volatility creates fear. Fear creates selling pressure, which in turn we see decline in stocks. Now, historically, those dollars would move into the bond market and we would see an improvement to price. And yes, that has been happening. However, not at the pace we would see in a quote unquote normal market, if normal even exists anymore. However, there is definitely light at the end of the tunnel in the sense that we are continuing to see progress on inflation, where yes, this week we saw rates kind of snap up. As these inflationary winds continue to hold, as we hear from the Fed next week, we expect to see further improvement. So where yes, right now it's a little, not a little, it's intimidating and scary, there is forward momentum. And that brings me to my closing point. We are seeing a resurgence in buyer activity. Myself, my partners, we've been busier than we've seen really in the last 12, 18 months. Buyers are coming in troves, and a lot of those buyers have properties they have to sell before they're buying. And as we know, and as I've said multiple weeks in the past, contingent offer, especially in markets like this, are challenging, if not outright not an option. So here, what we're seeing a tremendous gravity towards are bridge options, the ability to buy before an individual will sell. We've put together 2 transactions, which yielded 4 transactions for the agent this week alone, utilizing our bridge options. If you're running into scenarios where your client says, hey, I have to sell before I buy, there are options from traditional bridge down to non-traditional bridge. So if you're running into those, we would love the opportunity to help and guide on to what options are available. Now, next week we get Fed data as well as PCE. A lot will continue to focus, the markets will continue to focus on what happens from there. So as always, we'll bring that data as it comes forward. Let's make it a fantastic Friday and an even greater weekend. Thank you.